Hi, good morning. Thank you for coming our tax breakfast. And today our agenda is what qualifies as interest under the UAT city law. Application of general and specific interest deduction limitation rule. Carry forward and utilizations of disallowed interest expense, net interest expenditure. Interaction of the interest limitation rules with other city law provisions. So in this presentation, I am using a lot of time net interest expenditure. So I explained you before that one. Net interest expenditure is if you have a income and expense. So net of these both items is a net interest expenditure. So I use this word more time. So that's why I am telling you the net interest expenditure is net of income and expenditure. So let's start our presentation. What qualifies in interest under the UAT city law means what is the interest definitions. Definition of the interest city law cover the following. Any amount accrued or paid for the use of the money. If you borrow the money from the bank or any other institution, you have to pay to the interest of there. So this is the interest expenditure for you guys. Discount and premiums related to bonds, financing, but not trades. Profit paid in respect of Islamic financial instrument. It look like interest, but in Islamic point of view, they say the profit. So any amount you borrow from the bank, financing Islamic bank, so it is also be called as interest. Other payment economically equivalent to interest. Any other amount incurred in connection to raising the of funds. Interest does not include repayment of principal loan, debt. Interest related income of expense follow the business accounting method except capitalized interest which apply only under the accrual basis. So sometimes when you borrow the interest from the bank for the capital asset, so you are not booking as expense of the interest. You are you are booking as a capitalized. So when you are doing capitalization of the interest, so then you have to be see interest expenditure. What is the interest expense and what is you are going to book as a capital in the capital assets. Application of general and specific interest deduction limitation rule. So what is general and specific interest limitation rule is, so first deductible interest expenditures. Deductibility should be applied on the following order: general principle of deductibility, arm's length principle, special interest deduction limitation rule, general interest deduction limitation rule. So what is basically interest deduction limitation rule? Because if your net interest expenditure exceed 112 million dirham, so when you are exceeding this limit, so there is a certain authority put a limitation on that one, that you cannot you can maximum deduct the interest over the amount. So they put some limit. So this limit called deduction interest deduction limitation rule. So what is limitation rule and deduction limitation rule, I will explain in later other slides. So general interest deduction limitation rule is must be applied after all the city rules, apart from tax losses and provision, because it's on the last stage that it applied from the after all the city rules, then deduction interest deduction limitation rule will be applied. So what is special interest expenditure and limitation rule? A targeted provisions to prevent erosion of corporate tax base. So some interest expenditure is not allowable when you are doing calculation of the CT law. Maybe you can deduct from your accounting point of view, but when you are calculating your corporate tax liability and when you are calculating your corporate tax income, this interest expenditure is not allowed. So what interest expenditure is not allowed? That is loan directly, indirectly obtained from any related party for the following reasons. If you are borrowing any interest, any loan for these reasons, so any interest expense which you incurred for these transaction, this interest is not allowed for the city point of view. Maybe this can be allowed for the you are booking for the accounting point of view, for your management accounts, but it's not allowed for the city point of view. Dividend and profit distribution to the related party. If you want to pay dividend to your related party and you don't have the money and you are borrowing the money from the bank, and then that from that money you are paying distribution, profit distribution or dividend to your related party, this interest expenditure is not allowed for city point of view. Redemption, repurchase, reduction, or return of share capital to the related party. When you are repurchasing your, when you first you have to sell your shares and then you have to buy back from repurchase from the market. If you borrow money for that reason, that is also not allowable. Capital distribution to a related party. If you are distribution capital to the related party, and acquisition of ownership interest in a person who is or become related party after acquisition. So now what they are trying to say, if you are doing any transaction and borrowing money for related party point of view, that related party interest is not allowed. Because if I have a company, I borrow the loan and paying dividend to another company, my related party. So this is not allowed because local dividend is a one of the income that is exempt from city point of view. So if you are doing this transaction with the related party, so this is not allowable for interest expenditure allowable. This is one of the expense which is not allowed for city calculations. So what is the test of interest limitation rules? Limitation rules does not apply if the loan purpose is not to gain a corporate tax advantage. Of course, any transaction which is going to gain you the corporate tax advantage, this transaction is not allowable in CT point of view. So this is a special for interest, but any other transaction which is also giving you the city benefit that they reduce your city liability is not allowable for the city point of view. So what is a corporate tax advantage? A refund or increased refund of city, reduction of city payables, deferred of payment of city, and advantage of the refunds. Sorry, advancement of the refund, avoidance of obligation to deduct or amount for city. The onus is on the taxable person to demonstrate that the main purpose is not to obtain city advantage. Yes, the only the in this slide they are the only the in these slides they are saying, so if you are gaining this interest expense and this loan to get the advantage of city computation advantage. For example, if you are not taking this loan and your city computation is 1 million, city payable to the authority is 1 million, and if when you book this transaction the city payable is 800,000 dirham, so you are getting the advantage of 200,000 dirham for this loan, this interest expenditure. So if you are doing only for this purpose, this expenditure is not allowable. So what is the interest limitation rule is? I explained that this is the limitation rule that authority apply on. You cannot reduce too much your income only to minus the interest expenditure. Intent to prevent abuse of debt financing to reduce taxable income base. Yeah, they are trying to say that authority is abusing not taking the debt financing. So they will go to, you have to go for the equity financing. Better to go for the equity financing, not to for the debt financing. Net interest expenditure subject to the rule is yes. This I explained at the start of the presentation that what is the net interest expenditure is the difference of total interest expenditure including any carry forward amount and net income earned during the tax period. So this interest I explained that this is a net of interest expenditure and income, and you have to add if some interest limitation when you apply interest limitation rule, maybe there is some interest expense which will not deduct from the last year. So you can carry forward that interest expenditure for next year. So when you are calculating net interest expenditure for next year, The previous unutilized net interest expenditure income, in expense, you have to be add in the next year. Then you have to calculate your net interest expenditures. So if your net interest expenditure exceed 12 million dirham, the amount of net interest expenditure which is allowable for the city point of view higher of 12 million dirham and 30% of the adjusted EBITDA. This EBITDA is should be adjusted with the with all the expenditure add back. Some of one of the expenditure is you have to add back your interest expenditure. This interest expenditure limitation if the relevant period is more than 12 months. So if your company is set up in the month of May and your first financial year is January to December, so you are preparing this time financial only for the 7 month. So you have to be adjust this 12 million to the 7 month. You have to be used pro rata. If the period is more than 12 months, you have to add more than 12 months. You have to be proportionate on this 12 million dirham. If the relevant tax period is more than 12 months, the de minimis amount of 12 million is adjusted in proportion to the length of the tax period. Yes, if the length of the tax period is more than 12 months, you have to be adjust more than 12 months. If length of the period is less than 12 months, so you have to be proportionate the amount of 12 million. When the net interest expenditure is less than the higher of 30% of beta and 12 million, no adjustment is required under this rule. So simply if they put the limitation is higher of 12 million and 30% of EBITDA. If your interest expenditure is already less than 12 million, so then there is no interest limitation rule. Then all interest should be allowable for the city point of view. Application of general and specific interest limitation rule. Exception of general interest limitation rule is, so some of the organization they cannot follow interest limitation rules. First is bank, because bank has too much interest expenditure and interest and income. Uh, so they put some body they are allow whatever they have interest income and interest expenditures. So one of them is a bank, insurance provider, natural person undertaking business or business activity. Simply you can say sole establishment. So if you have any sole establishment, then this rule is not for you guys. Any interest any other person may be described by the authority. So these normally these three banks, insurance, and natural persons. Insurance provider is this limitation rule not for them. Exception does not apply to the treasury companies, capital insurer, and any other non-regulated financial entities conducting quasi banking or insurance activity or investment vehicles. Any the main point is if you are getting any loan before the 9th of December 2022, so because this date the city law will be introduced. So if you borrow any loan before 9th of December 2022, this loan amount will not include in your computation when you are calculating the interest limitation rules. So any historical loan which is before the 9th December, this cannot be applied for the interest limitation rules. So any other loan which you apply, which you only got for the qualified financial instrument, so this also be not included in your interest limitation rules. So they have almost provide a list of the qualifying financial instrument, qualifying infrastructure projects. They give a lot of example over there. So if you are doing this their project that got benefit for the public, they're giving the education, they're giving you the medical, they are the project which is getting benefit for the public. So if you are doing that type of project for them also, there is no interest limitation rules for them as well. So carry forward and utilization of disallowed net interest. Yes, so you can carry forward if you have any unutilized interest expenditure during the year. So you can carry forward for future 10 next subsequent 10 years. So So when you are going to calculate for next 10 years, so it should be 5 basis, because this will be take you for you as advantage, because the first in, the first out. So then the next if you have any unallowed interest expenditure, then they can carry forward for the next 10 years. So best is go for the first in first out. So any net interest expenditure disallowed in a tax period by the general interest deduction limitation rule can be carried forward and utilized in the subsequent 10 tax periods in order to it was incurred first in first out principle. Net interest expenditure carry forward cannot be transferred or utilized by any other taxable persons. So you cannot give your in loss relief, you can give to your loss to other parties, related parties, but in net interest expenditure you cannot give carry forward to any related party, to any other person as well. Where a subsidiary with carry forward net interest expenditure join a tax group, it can be utilized against taxable income attributable to the subsidiaries. So means we are a tax group, we buy another subsidiary company, and if that subsidiary is coming to join to us as a tax group, if that subsidiary has any unutilized tax net interest expenditures, as a group we cannot use that interest expenditure for us. So if that subsidiary earn the income, so that income, so for this rule is only this interest will he use only the subsidy which has that interest carry forward interest expenditure. They cannot give to the groups or group member as well. So cash based accounting and small business relief. Interest income and expense are recognized when cash points have been paid or received, rather than when they are due, will be subject to deduction, journal interest limit. So it should, they are saying to try to say that you have, when you are pay the interest, then you have to book. It should not be accrued. For example, normally company take a loan and book as accrual that why we will pay. So this for the limitation rule, they have to be say that when you paid the interest, then you have used this one. So net interest expenditure is below 12 million. De minimis rule does not apply, as we explained before that if your net interest expenditure is less than 12 million, so this rule is not for you guys. If election is made, taxable person is treated as not driving taxable income, then cannot deduct any carry forward any net interest expenditure. Okay, when you are getting small business relief, so you are not paying any tax to the authority. So any losses, and this is not for this interest limitation rule. If you are applying small business relief, you are not allowed to take your losses carry forward. You are not allowed to take your interest expenditure carry forward, because authority say you are not paying to us. So why you are giving? We are giving benefit to you for your previous year expenditure and any losses. So this is all of the slides which I have to show. If there are any question, you can ask me.